System fault detected. Loading security protocols. Reinitializing core modules. Reinitializing core modules. Failed. Auto destruction. 5, 4, 3, 2, 1. Unfortunately, your options are no longer available. Decision protocol has been locked. You lost everything. I'm sorry for your losses. You have 0 options left. Initializing the new user.
All right, guys, what is going on? What is Gucci gang, chat? You guys ready to learn something today? Y'all ready to learn something today? I promise I'm not gonna make it a bragging session. I'm gonna promise that I'm gonna try my best to not make it a bragging session. Okay. All right. I'm gonna do my best to not say I told you so. All right. We're working hard. Sometimes we hard to work. Sometimes we're working hard, baby. Know what I mean? But again, I said this yesterday, you know, when you're good at what you do, man, it's hard to not say I told you so. It's very difficult. Very. One day everybody will understand. Anyway, what's good? Eberneth, Scott, Jorix, Capitalist, G, Pop, Julius, Mark, T, Roger, Willow. G said, how's life? Learning every day and enjoying it? Absolutely. Absolutely. I had a thought the other day and I debated on sharing that or not. Yeah, we're gonna put a pin in that. But I don't know if I learn every single day, but I definitely learn all the time. I think I'm in like, ooh, I didn't do a number. I didn't do a count, but March, April. So it's April 14th. I think I've finished like 8 books this year already. And I'll probably have a lot more done by the end of the year. So maybe not every single day, literally in that sense, but all the time for sure. For sure. Was good, Akil. Was good, Slowly, Felix, Eric. Very good role model. I appreciate that. I may not be the best role model, but thank you. If there's two things that I could tell you to not pick up from me, it would be the cussing. Definitely don't pick that up. I regret that. I've been cussing since kindergarten. Massively difficult to stop doing it. Don't pick up my cussing. And I would say the ego too. Start early. Start early. Because as soon as you start getting good at stuff, that's when, oh, I don't have an ego, John. And you start like actually making money. You start actually pinpointing the marketplace better than everybody else. Yeah, it's going to creep up on you. Be like, oh, I never knew this was here. Oh, it's there. Everybody has an ego. It just, not everybody has a reason to actually, let it loose. If you don't have an accomplishment, if you don't have anything, then of course you don't have an ego. You have no reason to. You have nothing. But when you actually have something or multiple things, like, yeah, it's coming. So try to work on that right now. Work on that ahead of time. I was an a-hole for a long time. I can still be that way sometimes. But, progress, not perfection. Right, Alexandra? He said cursing is the best part. Yeah, but it's not good. It's not professional, technically. All right, anyway, I think that's enough for the intro. We'll start with eBay because we're already here. I'm not going to say I told you so. I'm not going to say that. But I will say we're at 100.84 because this is a live price, but we did spike above that 101.15 level. Our high is... That can't be right. There it is. The high of today is 101.33. So I wonder if anybody said right in here on Thursdays, maybe Friday's stream, Thursday's market review, Friday's stream, say, hey, I want to see if we treat that gap and see expansion higher. Couldn't have been me. I'm all hindsight, baby. I'm always hindsight. I'm 100% hindsight. I'm Captain Hindsight around this bitch. Never foresight around here. Of course not. Never that. So that's cool. So eBay, I believe that's all-time highs. That's a wonderful place to take partials. It's a wonderful place to lock in profits or, and or move your stop. And yeah, 2.7% on the day. So that's wonderful. PayPal, I didn't cover this a lot. Communication. Accumulation takes a long time on a daily time frame. But we finally did get a nice expansion day yesterday. And today it's up 1.6%. So we'll see where this goes. But PayPal, I think this is going to take a minute. I won't be covering this every single day. Just like a lot of the stocks I'm not going to cover every day because, it's just day to day. But stocks on the daily, weekly time frame, they take months to pan out. So, I think yesterday we talked about 617.52. We talked about those highs in there. Bang, got that yesterday. Oh, sorry. I lied. We never talked about those highs and we never talked about all-time highs. And I never tweeted to say, about any of those highs that we left behind. Yeah, I never did that. Nope. I always have to talk about what happened. I can't talk about what happens beforehand because I don't know. So those highs we actually got yesterday, and I'm not really sure why that wick is there on the daily time frame like that. I don't know. We did not actually get that high yesterday. So that is strange to me, but we did tap that 617.52. Again, looking at the daily time frame, that was these highs over here. And then all-time highs as well as a set of low resistant highs. And so far, we have been fairly low resistant, haven't we? Pretty cool, right? Pretty cool. Now, this does tie into the lesson that I have today. Y'all see the title? Wisdom, Good Conduct, and Facilitating the Avoidance of Disaster. Now, I did not make this up. This was in Poor Charlie's Almanac. And I read that sentence. I had to go back. I read a couple more pages, and then I went back, and I read it again. And that's where I got the title from. It was at the end of a paragraph in that book. And I was like, that is such a good, like, that's going to be a title one day to one of my streams. So that is what I want to go over. A few different things: wisdom, good conduct, and facilitating the avoidance of disaster. Does that sound interesting to you guys? I know there's like 40 of you on here. Does that sound interesting? Drop a 1 in the chat if that sounds like something worth learning. You know, we're seeing moves on gold. I covered that yesterday. We're seeing moves on the triple Qs. We're seeing beautiful moves on eBay, right? We talked about that. You know, we talked about seeing expansion on, well, basically the triple Qs, but for Nasdaq as well. If you remember from that Thursday market review, absolutely almost 2,000 points later in like 2 weeks, 2,000 points. I mean, come on, man. Like, is that not worth learning to you for free? I'm out here doing this for free. Well, the market reviews are not, but a lot of other stuff is. And I'm teaching you how to do this. So we got a few ones in here. So I guess everyone else, you don't want wisdom? You don't want good conduct? You guys suck. All right, let's get into it. As always, I'll drop the PDF a little bit later once the stream is over. I want to go over wisdom. So in this sense, wisdom is knowing what needs to be done. Okay? Wisdom is knowing what needs to be done. Now, I teach a lot of that here. We go over a lot of concepts. We go over things that are highly structured, not market structure. I don't really talk about market structure the way that most people do. I think it's the most overrated thing in the history of everything. But I'm saying, like, we pay attention to things. We pay attention to, like, the last imbalance that becomes an inversion, or like the low risk buy. I just put that out as an Instagram reel, by the way. We talk about Sunday's gaps, weekend gaps that can become inversions as well, or reclaimed in this sense. This would be a reclaimed Sunday's gap, because we gapped lower, got through it. It saw a response like intraday. It ripped through it. And then actually it was this, maybe it was it was one of the first couple lessons we did. I told you that if we did that, might have been on SPY, if we get through the gap and then back above it, we would treat that to go higher. So if you're watching this series in order, you probably already saw that. More hindsight for you. But anyway, things are very specific, right? We're looking for levels of liquidity. We're looking for like pools of liquidity like that, or potentially all-time highs. We look at framework like market maker models, more framework, you know, structured concepts like the phases of price, right? We like that. And by structure, I mean, let me go through some of the visuals real quick just to give you a refresher to understand. Like something like this is highly structured because it's specific. There are different kinds of inefficiencies, right? The imbalance, you have a couple of those here. You have a gap, it's not the same thing, right? An imbalance and a gap is not the same thing. Okay. And then from the imbalance, we have inversions. And with gaps as part of imbalances, we have suspensions, and those can actually be inverted as well. So that's what I mean by highly structured. and highly technical. We have processes, say like market maker models, right? It is a process because it always goes in order. It starts with consolidation, right? It doesn't start with expansion. It starts with consolidation. Okay. You can see the phases of price in here as well. Expansion, retracement, expansion, retracement, reversal, right? Here's that V-shaped reversal, retracement, expansion, retracement, expansion, retracement, expansion, right? It's always in order. Distribution, redistribution, manipulation, lowers by first stage, second stage, terminus, right? That's structured. We have the open high low close or the open low high close. Again, it's very structured and it's in order. I'll just go over one of them. Right? The open low high close formation, if we're anticipating expansion, wink wink, then we're going to see open low high close. We're going to see candles that are closing closer to its high than its low. That's what we anticipate, right? That's what I mean by highly structured. So that's wisdom, knowing what needs to be done. It's knowing how to anticipate expansion or how to anticipate a reversal or how to anticipate a continuation, right? There was a thought that came up, but I'm not going to say that either. I'm trying to be professional today. Okay. So with wisdom, right, knowing what needs to be done, that by itself is not going to help you entirely. Like, it will help you, but that's not all of it. That's only a piece of it. So the other piece to that is good conduct. So good conduct is doing what needs to be done. You guys with me so far? Drop a 2 in the chat. Wisdom is knowing what needs to be done. Good conduct is actually doing what needs to be done. So if you're anticipating expansion, you know, it's buying below the open, close to the open, or just after it, or at least getting in sync somewhere in that move higher. It's not shorting bearish markets like a lot of goobers on Twitter are trying to do right now. Remember yesterday? I said, why are you trying to short this market? It's bullish. Why are you trying to short? I said I wasn't trying to be an a-hole. I'm just trying to give you some constructive criticism here, right? We got a big ass up candle today, big ass up candle. I'm trying to tell you to stop shorting bullish markets. I've been doing that for like a decade now. Literally, even before I was in the MLM industry, I was telling people, guys, look at a chart, like a weekly or a daily chart on indices. It's almost always bullish, almost always. And you being permanently bearish is permanently retarded. I'll have to edit that out later, but that's stupid. Okay? So when everybody's bearish, that's when you go long, okay? So there's some more wisdom for you. So wisdom, knowing what needs to be done. Good conduct is actually doing what needs to be done. Now, facilitating the avoidance of disaster, that is creating an environment for optimal performance. Okay, we got a lot more notes to go, by the way. But I'm just telling you what I mean. The title, right? It's 3 parts: wisdom, good conduct, and facilitating the avoidance of disaster. And what that is you are creating an environment for optimal performance. But I'm going to tell you how to do a few of these things. All right. And so real quick, just for your environment, there was just 2 questions. What do your surroundings look like? And who do you spend time with? Those are 2 of some of the biggest things about your environment. What do your surroundings look like? And who do you spend time with? So drop a W in the chat if you guys are ready to go over wisdom, how to obtain wisdom. It's not obviously, you know, Ryan Holiday wrote a whole book on wisdom. I can't go over, you know, every proverb in the Bible, every, you know, verse of Ecclesiastes and all these things to, you know, go from 0 to 100 on wisdom. But I do want to give you a solid foundation. a good starting point to understanding what wisdom is and how to get it, or at least how to move towards getting it. So, a few bullet points for you under wisdom: reading, studying, reviewing performance, building a second brain, creating and sticking to good habits, eliminating bad habits, and never believing you know it all. Okay? Never believing you know it all. You've seen my tweets down to the minute. Down to the minute of the low, minute of the high. Just disgusting. And not a lot of people can do that. But I still do not know it all. I still don't know enough. Okay? There's still more precision to be had. So I'll say this list one more time in case you missed it. Reading, I tell you guys to read all the time. We have Book of the Month. I share pretty much most of the books that I get. I'm actually waiting for one today. John, I didn't tell you guys this ahead of time, but John Maxwell has a new book coming out today, the 14th, and it's called Getting a Return on Failure, I think it is. And that was supposed to be here this morning, and leave it to Amazon to always, be delayed, right? Short Amazon. I'm just kidding. But it is out for delivery. Okay, we love that. Anyway, reading. At the Wall Shelf is my Instagram page that I share all the best books with. We have Book of the Month here. You should not just have one mentor. I cannot be your only mentor. Nobody should be your only mentor. Okay? Does that make sense? You should never have just a singular mentor. Even if you learn an instrument, you can still watch YouTube videos and other tutorials and all that. I even made a playlist on this YouTube channel, helpful videos, and I include videos from other people. I just updated the list yesterday or the day before. Studying. You have to study price. You need to print off charts. You need to look at old data. You need to look at the phases. You need to look at the concepts. You need to look at, tweets. I have all the tweets that you can put on your chart, and that's free. That doesn't cost you anything. I literally do that for free. I do this for free. I do the tweeting for free. I do the Instagram Reels for free. I post books for free. Like, dude, you guys have no idea how good you actually have it. You don't even know. You have no idea. Okay? That stuff is for you. I mean, yeah, it makes me look good. It does. But that is for your own learning, right? When we go over back to eBay, right? And seeing stuff like this, you can take that tweet and post it, and that way you can see exactly what I'm seeing, right? Like if you move the chart, or like if you go in replay mode and bring it back, so that way it cuts it off, and you can see exactly what I'm saying. What have we done? Right? Why did he say we wouldn't go back down in here? Why would we get through this gap and then back into it to go higher? Like, why would we do that? And that's exactly what we've done, right? But if you do not learn to anticipate, if you don't learn to predict, okay? Don't spend all your time reacting, okay? Learn to predict, and you won't have to react. You'll be anticipatory. You'll be like the lion who waits patiently for that herd of gazelles to go by. Does the lion just say, "Oh, fuck it, we're out of here. Let me go find one"? The lion doesn't do that. The lion's looking who's slow right now, who might be injured right now, who's in the back that's, I might be able to go get. What's the low-hanging fruit, essentially? Because the lion wants to eat, period. And so it's going to be methodical, right? It's not going to rush into things. So you have to learn how to do the same. Predict. All right? Review your performance, right? The Top Step X platform has good stats you can look at. Profit factors, average win, average loss, that calendar they have, all that stuff. That's good information. It might be painful to look at, especially in the beginning if you see a lot of red on there, you know. But all of those red boxes or those red numbers and everything, that is an opportunity to learn. Okay? You might not know that you're doing something wrong. Maybe your win rate is low. Maybe your profit factor is low. Maybe you have a high win rate, but you still struggle to pass a combine or get a payout. Then maybe it's a money management problem. You guys see what I'm saying? So you have to read, you have to study, you have to review your performance. You have to see what you suck at and fix it. Building a second brain. I've talked about this time and time again, but we're going to make this a specific episode, right? It's a CMC, Core Mental Concepts, episode 2. Building a second brain. You see this? This is like a commonplace journal. I have a lot of stuff in here. TBR list, books that I've actually read, and things that are private to me that I'm not going to share. And that's what it's for, right? And nobody reads this except for me. And it'll be the same for you. You write whatever you want. You draw whatever you want. I actually have a pretty cool page in there on mental models. I've got a list of the productivity mental models. I'll share that in the future. I have general thinking concepts, and I love those. And that's where I put them in there. Creating and sticking to good habits. Best thing I can tell you is to read Atomic Habits by James Clear. Making what you want easy and attractive and rewarding, and making what you don't want ugly, difficult. You know what I'm saying? Those are some of the biggest points. And then the last thing is just never believing you know it all. Never believing you know it all. I know you guys are reading. Well, hopefully you're probably not reading, but I'm going to assume that you guys are reading the Meditations of Marcus Aurelius. That's our book of the month for April of this year. Right? Gorgeous. See that? And it was Marcus in his late 40s or 50s who was caught in the street one day walking to, I think, the Colosseum or something, where speakers spoke. And they asked him, they're like, Marcus, what are you doing? And he said, I'm going to see Sextus to learn that which I do not yet know. Powerful man, the most powerful, the most richest man in the world, emperor of Rome, leader of legions of Roman soldiers, still not believing that he knew it all. Like, come on. So that is wisdom. Okay, I'll see this list one more time, and then we'll move on to good conduct, so that we make good time today. Wisdom: reading, studying, reviewing performance, building a second brain. That's your commonplace book. Okay. Creating and sticking to good habits, eliminating bad habits, and never believing that you know it all. You're welcome, Mark. See, when you actually read stuff, you have cool stories like that in the back of your mind. So then we actually have conversations with people, and you want to teach them something, bang, I got stories for days. So it's not to show off. It's not to say, oh, look what I know. Y'all know I know a bunch of shit, but that's not the point. The point is knowing stuff and then applying it. That's the end goal of knowledge, as per Aristotle. The end goal of knowledge is action. Okay? All right, so type conduct if you guys are ready to move on to the next thing. Type conduct in the chat if you guys want to go over good conduct. Not everybody has good conduct. Even myself sometimes. We make mistakes. We get out of trades early. We hold on too much, or we hold on for too long. We over leverage, or maybe even under leverage. I would probably say over leveraging is more of a problem than under leveraging for most traders. But that's still a thing too. So yeah, we'll go over that. All right, good conduct. Planning ahead, staying organized, following the rules, not reacting impulsively, controlling your actions despite whatever emotions you have, trusting in the process even after setbacks, focused on improvement and taking responsibility for your actions and your results, taking care of your body and mind, filtering your mental diet, keeping good company, and taking care of each other. So that's a lot. We probably won't go over everything individually, but planning ahead. You can plan ahead. How do you do that in trading? Framework. If we have some highs and we already have manipulation and now you're working within the range, then okay, next up after manipulation is the low risk buy. Next thing after a V-shaped reversal is a retracement. That's your low risk buy. After that is what? First stage accumulation. After a reversal is a retracement. After retracement is expansion. You see how all this fits together? Are you seeing it? I'm literally giving you all the keys here. I'm throwing up all these keys here for you. Or gems, whatever you want to call it. Okay, after we cross 50% and we get back into a discount, right? Oh, well, John said we shouldn't trade back down here and we never went back down there. Bang, and now we're up here, right? Come on, it's the process, baby. It is the process. Once we cross 50%, that's your neon signature, your neon sign, your flashing lights, okay? Saying, hey, look at me, look at me. I'm above 50%. I am now going to go for those highs. So I'm going to give you one more chance to get in a discount before I'm running up there. So guess what? When you're part of the second leg and you see a retracement, you're not going to be like, oh, what if I'm wrong and it comes all the way back down to my entry? Why are you thinking like that? Why are you I don't think like that. And that's what you saw. You saw me say, hey, we should do that. We should see expansion. Bang. Look at the last 3 days. Because I know the process. Nope, I don't always get it right. I'll get it wrong. Sometimes I'll mistime it. Maybe we have a little bit of a deeper retracement. It happens. But it's the same process every single time. Manipulation always sets the low. The low risk buy right after that. Or the low risk short right after that. We don't really have it here, but if we had an original consolidation and we get back into it and leave it again, okay, bearish until manipulation. That's why back in here, after that monstrosity of a day, February 4th, I can't remember what happened back then, but I remember saying, hey, you know what? Probably going to go for those lows in here. Took a few days or a couple weeks. Yeah, we eventually did what? Went for those lows. Because it's the same process over and over and over again. It's MMXM over and over and over again. This is how the markets are programmed. This is how the algorithm books price. Period. Point blank. Okay? Manipulation always has the low. These 7 stages are always in order. They are never out of order. All right? So anyway, I don't know where I left off. Planning ahead, staying organized, following the rules. What are the rules? Well, there's a lot of them, but if you are trading based on market maker models, whatever stage you're at, the stop can go to the previous stage low. I'm giving you more nuggets. I'm in machine gun mode today. If you're trading the low risk buy, stop goes to manipulation low, or somewhere if you want a little bit of a tighter stop. If you're trading into a discount, that's fine. If you think the second stage is next, okay, you can enter with a stop at the low of the previous stage. If you're in something like this, retracement as part of the second leg, then that current stage low, your stop could go there. That would be a wide stop in this sense, but not every stop loss is going to be, or let me back up. Not every trade is going to be a 1 to 2 or a 1 to 3. Sometimes you're going to have those really late 1 to 1s. It is what it is. If you don't like it, don't trade it. Or have a tighter stop. But that's some parameters that I gave you. And you're trading the last move anyway. If you're not in from manipulation or low risk buy or the first leg, and you're this late anyway, you can't complain that you can't frame a high RR setup. you're late. The move isn't done, but you're technically late and you're buying in a premium. So either take that 1-to-1 or go into a smaller time frame and frame something a little bit better based on that. Okay, but those are the rules. Not reacting impulsively. Okay, there's no reason to be worried when the market trades against you for a couple of candles. There's no reason for that. Markets don't move in a straight line. None of them ever do. Occasionally, yeah, you'll have a fat gap, or occasionally you'll have a day that does that. Okay, sure, but that's one day here, that's one day here out of how many days are in here? You know what I'm saying? It's like less than 10% of the time. So if you know the stages, if you know the phases of price, then you can anticipate a retracement. You know, market makes a higher high here and you're in from down here. Okay, well, we might trade lower to take out that low. Market does that commonly. So why would you be worried about that? It looks scary because it looks like it's going to take your stop. But that's how it works. So when you understand that, you reverse engineer it. Stop being scared. It looks scary. And especially when there's real money on the line, sure, it looks scary. But if you were to study, like I fucking tell you to do, then you would understand that that's part of it. And then when you actually sit through that and you go, okay, now we see expansion. And now you're like, oh yeah, that's wonderful. I'm glad I sat through that. Right. And then imagine holding for all-time highs. Like this. Okay. Don't react impulsively. Follow the rules. Control your actions despite whatever emotions you have. Okay. That's my biggest, I guess, controversial take in the entire industry. Everybody in the entire trading industry says, control your emotions, control your emotions. Nobody does. It is impossible. It is physically and mentally impossible to control your emotions unless you are a psychopath, period. That's the only exception. You have to be a psychopath to not have emotions. We are human beings. We are born with them. Most of us are. We don't control our emotions. We don't. Okay? Somebody comes up and, shoots your partner in the face and they're dead, right? Kind of like A-Train did at the beginning of season 1 of The Boys. Awful show. But, bam, chick dies right in front of him. That's going to affect you, bro, period. You know what I'm saying? Like losing money sometimes when people take a losing trade, like they're on Twitter, they're like, oh, if I take a loss, I don't feel anything. You shut the fuck up. You feel terrible. You feel bad because, yeah, you took a loss. Your account decreased in value. Okay. They're pretending like they're this macho man. They're not. Everybody feels it. But what you do is what you don't do is react impulsively. You don't control your emotions, but you do control your actions, okay? You can be mad at somebody and not punch them in the face. You can get cut off in traffic and not flip them the bird, all right? You can hold a trade in drawdown or even like if you're in from here, you can sit through a pullback. You might be a little bit nervous, but you can still hold it for the highs or for the lows if you're short. No matter what you feel, the market does not know you. The market doesn't know me. It doesn't know any of us. Okay? These pullbacks, nobody knows your internal emotions except for you. Okay? And that has nothing to do with price movement. Nothing. No matter how you feel, good, bad, or indifferent, the market's going to do what it's going to do. Does that make sense? And I'm explaining it this way. And I'm giving you here probably a little bit of the obvious, but it's insane to me how irrational human beings can be. Over leveraging when we revenge trade. Or getting out of a trade early because we don't want to take more drawdown. We don't want to see the P&L. And I'm supposed to be watching the P&L anyway. But you see the P&L going lower and you just want to cut it so you can just get paid and keep going. Right? It's irrational. But that's human beings. We're born that way. We're born sinners. Okay? And we're born with these irrational tendencies. That's why we have to wring that stuff out. Okay. Y'all ever done that? Y'all ever took like a t-shirt or a towel that was wet and you twisted it to like get all the water out? That's what we have to do. All of our bad habits and bad way of thinking and our tendencies to do certain things, moving our stop too early, over leveraging, or even trading without a stop, just stuff like that. We have to wring all that stuff out. And what's left over? Profitability. Okay. Trust the process even after setbacks. You've seen me be wrong before. And I showed you that tweet yesterday. Well, I deleted it here earlier, but you saw me right there on March 27th, or maybe it was the weekend, where I said we may not make a low soon. I was like, we're going to come back for those highs and those highs, but it might not be soon. And then the next day, that's when we made our low. And then it was that Thursday afterward, I said expect expansion. And then we got expansion, and nobody knew that was coming. Crazy to me. But I may just release that market review just to have that out there. But anyway, you've seen me be wrong. But if I am wrong, that's okay. I'm going to just go back and get back in sync with price. Simple. It's that simple. None of us would last very long if we quit after a losing trade, or even two losing trades in a row. You would quit immediately. You know what I mean? That's not how the NBA works, or any of the sports. That's not how it works. I mean, all that shit is rigged anyway, but even if a team loses 3, 4, 5 games in a row, they still go play a 6th and 7th game. You know what I'm saying? So you have to trust that market maker models are still going to work. You have to trust that V-shaped reversals, retracement expansion is still going to work. You have to anticipate, or let me back up. You have to realize that gaps, can become inversions, and they can also become reclaimed. Like, you get it wrong once or twice, that's fine. If anything, that's good information. You missed something. Figure out what you missed and then get in sync with price. Focused on improvement and taking responsibility for your actions and your results. You're the one who presses the button. I can give you a bias. I do it all the time. All the time. And if you decide to short, well, good fucking luck to you. But you're the one who has to press the button whether you want to go long or short. And if I'm wrong and you took a trade based on what I said and you take a loss, that's still your fault. I gave you a bias and I was wrong. But you're the one who actually took the trade. It's your fault for that loss. It's never the market's fault. It's never anybody else's fault. It's definitely not Trump's fault. Everybody's blaming Trump right now. Oh, Trump's rigging the market. Market's been fucking rigged, you idiot. Markets have always been rigged. What are you talking about? This shit always forms highs. This shit always manipulates lows. This shit always has inversions and whatnot. What are you talking about? You're focused on the wrong shit. Of course, the president has insider information. Nancy Pelosi has fucking insider information. You don't think they're going to get all the boys together and start buying stock at the lows? Here's the fucking thing. Trump literally came out and said the market is going to come roaring back like never before. Has Trump been wrong yet? Be honest. When it comes to the stock market, has Trump been wrong yet? Fuck no. This guy has been literally batting 1,000. And you want to say, oh, well, the market's going to reverse down here. The market's going to do this and do that. That's because you don't like Trump, because you listen to the media and, he does dumb shit sometimes. I can definitely agree with that. But that doesn't mean that he's going to be wrong about certain things. He has not been wrong about the stock market yet. Why would you go against that? Who has more insider information than the president of the U.S.? You fucking tell me. Nobody. Unless you're like a COO or a CFO or a CEO of a company, maybe for that specific company, sure. But like when it comes to the markets and policies and oil and all that shit, come on. He knows what he's talking about, and he's trolling a lot, and I can see right through that. And that's why I'm going to get in sync and tell you, hey, we're going to see expansion. And we get that. Oh, but Trump is this, Trump is that. No, you just don't know how to trade. Thank you, Scott. Yeah, sometimes I get a little, the caffeine's kind of like a delayed reaction, Like I don't feel caffeine and then I get on here and it just hits me like a fucking train. But I don't even know where we're at right now. The point is, take responsibility for your results. Okay? Nobody can take responsibility for your results. Only you can. And when you realize that most people are stupid and that most people are wrong at turning points, you're going to realize that that trading is actually very fucking easy. If everybody is bearish down here, and even I was, that was a bad tweet. That was a bad call. 100%. Because I thought we were going to take those lows. And we didn't. But that's fine. I immediately admitted that I'm not correct in that. And then flipped and said, okay, now we should be bullish based on a few days worth of information. And now we're almost at all-time highs, like 2 weeks later. You see what I'm saying? Like, if everybody's bearish, bro, be bullish. If everybody's bullish, be bearish. And you will have the easiest trading career, I swear. You will have the highest win rate out of anybody you know. Period. Most people are wrong. What did Warren Buffett say? Be greedy when everybody's fearful and be fearful when everybody's greedy. Hello. That's a mental model. Look at how that worked for them. Charlie Munger, rest in peace. Warren Buffett, the greatest investors of all time. You're going to ignore the greatest... you're going to ignore the advice of the greatest investors to ever live? You're stupid. You're literally stupid. You know what I'm saying? You're ignoring good advice. Let me just move on, man. We got a few more things. Take care of your body and your mind. Filtering your mental diet. Stop scrolling on Instagram and YouTube shorts and reels and all that stuff. It's decreasing your attention span. It's decreasing your critical thinking. That's why people are stupid. They can't think anymore. Keeping good company and taking care of each other. Okay. We all should have good friends. When they're in need of help, you help them out. When you're in need of help, they'll help you. Period, point blank. All right, here's the last thing, and I'll try to condense this as much as I can without taking away from it. Here's our third part for today. I got to do a lot of editing, man. Here's our last part. Facilitating the avoidance of disaster. We're not looking to achieve a perfect track record. We're not looking to do that. You can do everything right and still not win. You can do everything right, still take a losing trade. No system of business, thinking, or way of trading can guarantee flawless results. What remains in our control is what we think, the choices we make, or the choices we don't make. Our job is to do the best we can. Check this out. Bad results may not always be preventable, but bad decisions are. Pilots and surgeons have checklists. Traders have checklists too. We can start there. Charlie Munger built a latticework of mental models that he relied on to make good decisions. He was also great friends with Warren Buffett, another smart and successful individual. So at least three things that we can learn from Charlie Munger. Number one is to have a decision-making checklist. Number two is having smart business partners or maybe smart trading partners. I ain't going to say that I'm the smartest trading partner, but I can definitely help you with your edge. Right? I can definitely help you with your trading. Number three, he read a lot of books as well. He read a lot of books. So think about that for a second. Some of the top two greatest investors of all time had decision-making checklists. They were best friends with each other, pretty much. They had other good friends too. And they read a lot of books. Why would you not want to do the same? Why would you not want to do the same? He knew what to do while also knowing what not to do. And he learned from the mistakes of others. That's what he did. Okay? He learned from the mistakes of others. He connected different fields of subjects together through common concepts. So in summary, for facilitating the avoidance of disaster, shape your environment, read books, right? Have your books surrounded as well. I don't know if you've ever noticed, but look over here. What's right there? You see that stack of books? That's environment. I'm putting books in close proximity. If I want to go read them, I'll read those. I got books all over the place in multiple rooms. Okay? That's environment. I have literally a $600 air purifier in my room. I'm shaping my environment. Icelandic, right? Not paid sponsorship. Icelandic water. I'm shaping my environment. I'm taking care of my body to a high degree. I had a Costco hot dog the other day, so that may not have been taking care of my body. I can't even leave the facility without hitting the bathroom. But with that as the exception, it's a lot of like grass-fed steak, grass-fed beef, grass-finished steak, and grass-finished beef, stuff like that. Okay? So I'm taking care of my body, taking care of my mind, and you see what it does. You see what it does, bro. Like, I said I wasn't going to make it a bragging session, so I got to continue. You can have your goals written out. You can have your goals posted on the wall, posted on the mini fridge, posted in your car, posted in the bathroom somewhere. I've seen people take a dry erase marker and write affirmations and weight goals and all kind of stuff on their mirror in the bathroom. I mean, you can do that. I don't do that, but if you want to, you can. You can have note cards with quotes on them. I have a ton of those. You can post Bible verses everywhere. That's fine too. Choose your friends carefully and avoid toxic and negative people. Okay? So that is the summary for what we have gone over today. Okay? I'll go through this very quickly. And again, I will drop this in the Discord. You guys can have it. But wisdom, good conduct, and facilitating the avoidance of disaster. We talked about wisdom, good conduct, and facilitating the avoidance of disaster. We talked about wisdom, reading, studying, reviewing performance, building a second brain, creating and sticking to good habits, eliminating bad habits, and never believing you know it all. We'll never know it all. Good conduct, planning ahead, staying organized, following the rules, not reacting to things impulsively, controlling your actions despite whatever emotions you have, trusting in the process even after setbacks, focused on improvement and taking responsibility for your actions and taking responsibility for your results, taking care of your body and mind, filtering your mental diet, keeping good company, and taking care of each other. And what we went over like in the last 6 to 7 minutes was this: facilitating the avoidance of disaster. We're not looking for a perfect track record. You can do everything right and still not win. You can do everything right, still take a losing trade. You can do everything right, still take 2 or 3 losses in a row. Anything beyond that, and you're not doing something right. But no system of business thinking or way of trading can guarantee flawless results. What remains in our control is what we think, the choices that we make, and the choices that we don't make. Our job is to do the best we can. Bad results may not be preventable, but bad decisions are. And those are the 3 things that we can learn from Charlie Munger. Again, this was from Poor Charlie's Almanac. I have it on Kindle. I actually bought a physical copy, but it hasn't came in yet. But he had a decision-making checklist. He had a smart business partner that was Warren Buffett, and he read a lot of books. And he knew what to do while also knowing what not to do. That's inversion. Okay, knowing what to do is one way, knowing what not to do is the other side. Inversion. He learned from examples of people who did fucked up shit. He connected different fields of subjects together through common concepts. And we want to shape our environment. Our desk, our office, our bedroom, our house, our garage, our workplace, whatever it may be. And those are some resources. Poor Charlie's Almanac by Charlie Munger and The Great Mental Models by Shane Parrish. So I'm telling you, man, you got to do this stuff. I kept it at 1 page. you know, short, sweet, to the point. And this is just another way to elevate, be organized, make good decisions, know what to do, know what not to do. That's fine, G. You can write. If your handwriting is nice, you should post it in the Discord so I can take a look at it. With your technical series over the next 6 to 12 months, what would you do daily to become elite? Oh, everything here, basically. What you should do, G, now that you mentioned it, there's a playlist. I think it is the personal development playlist. And there's two videos that are really great. Well, it's all really great, but as it relates to your question, yeah, if you go to the personal development playlist, there's Cream de la Cream Part 1 and Part 2. Those are gas. Those are actually supposed to be part of the sniper trading course in the MLM industry, but things did not go that way. So yeah, it's like 8 minutes, 9 minutes, and those will tell you. I would focus on those things. So thank you, G. Thank you for blowing up my chat as well. I appreciate it. I have an expensive ass air purifier in my room as well. Curious what you have. The Air Doctor 3500. What was your biggest mistake when learning to trade? Man, I'd say trying to rush it and listening to people who didn't know shit about shit. So in the beginning, for me, and this was like this for like 2 or 3 years, it was trying to figure out what the best indicator settings were. And, you know, I went through all that stuff, like the MACD and the RSIs and Bollinger Bands and all that stuff. And, you know, I didn't have a high level of consistency there. Things did not, you know, work how they were supposed to work. The examples that people taught were cherry picked. You know, they would show when it worked, but they really wouldn't talk about when it didn't work. But eventually, I came across the very things that I teach you. And a few things were self-discovery as well. But yeah, that was my biggest thing, is I was trying to rush it. And I listened to the wrong people. But 12 years ago, you know, 2014 was a different time period. There weren't 19-year-old mentors with $3,000 courses and shit like you see today. That was not like this a decade ago. It wasn't like this at all. And smart money concepts was not really a big thing back then either. There was very few people that had this type of knowledge and experience. So it took a long time to get here, but you see what it does. Very few people have better precision than some of the stuff that I've shown you. So, but yeah, anyway, that's gonna be it. So y'all be good, be blessed. That'll conclude episode 2 of CMC. That will end wisdom, good conduct, and facilitating the avoidance of disaster. Y'all be good. I'll put out a market review later today. I will be here tomorrow, same time, same place, on Wednesday the 15th. And it'll be the same price too.
Just